Um, the notion that we're going to need decentralization for any of the apps and any of the things that the tokens and the altcoin industry talk about, I think is absurd, because none of these things justify the enormous excess cost of centralization. So running an app on AWS is about a millionth as cheap as running it on any of these supposed smart contract platforms. So the only thing that they're doing is that they use these buzzword stories about a decentralized economy and doing this and doing that. They use these as marketing to introduce a new token, which is just a new bunch of fiat Ponzi.
Assalamu alaikum. My name is Rakan Kayali, and welcome to the Practical Islamic Finance podcast, where we discuss everything related to building halal wealth. Consider becoming a member on practical-islamicfinance.com, where we offer halal-conscious investment insights for every investor type. Our team of investment professionals analyzes and tracks hundreds of stocks and cryptocurrencies to find the ones we are comfortable with from a halal perspective and which we think have the brightest financial prospects. Views expressed on this podcast are not meant as personalized investment advice. Be sure to do your own due diligence before making any investment decisions. And without further ado, Bismillah. All right, Assalamu alaikum everyone. We have a very special guest for this episode, Dr. Saifedean Ammous. Dr. Saifedean is the author of The Bitcoin Standard, the best-selling book on Bitcoin. Translated into 30 languages, he is also the author of the Fiat Standard and the forthcoming textbook, Principles of Economics. He teaches courses on Bitcoin and economics on his online learning platform, Saifedean.com. We'll link to in the description of this video, and if you're listening on podcast, in the description of this podcast, and hosts the Bitcoin Standard podcast. Dr. Ammous holds a PhD in Sustainable Development from Columbia University, a Master's in Development Management from the London School of Economics, and a Bachelor of Engineering from the American University of Beirut. Dr. Saifedean, welcome.
Thank you so much for having me. It's a pleasure to be here.
If you don't mind, I know that myself and probably a lot of the listeners and viewers are interested in knowing a bit more about you, the person, before we just delve into Bitcoin. So anything you'd like to share about sort of your story and how you got to where you are?
Sure. So I was born in the West Bank in Palestine, in Nablus. And I grew up in all over the world, basically. Traveled a lot as a kid. Lived in Saudi Arabia initially, and then we lived in Brazil for a while. Then we lived in Jordan for a bit, and then back in Palestine. I finished high school in Ramallah in Palestine. And then I did my undergraduate at the American University of Beirut in Lebanon. And then I did the master's at LSE, as you mentioned, and a PhD at Columbia. After that, I returned to Lebanon. I was teaching at the Lebanese American University for about 10 years. And at the end of those 10 years, I published the Bitcoin Standard. And after that, I left my university job and I work independently now. I self-publish books, and I sell. I have an online membership. An online teaching platform for teaching economics. So instead of teaching at a university, I teach at a website, at my own website, Saifedean.com. I do online courses, which allows me to reach many more students than I would at a university, and works out much better because saves me on a lot of the needless bureaucracy of the fiat university system, and allows me to work with a lot more students and reach a lot more students. And just last year, I published the Fiat Standard, my second book, which was sort of a sequel to the Bitcoin Standard, explaining and trying to study the fiat monetary system.
Perfect. So we were talking a bit before we started. You sort of have a decentralized presence globally as well, which is interesting since you've modeled your life sort of off of the structure of Bitcoin, which leads us to the obvious topic of this episode, which is Bitcoin. And I want to kind of take this opportunity to introduce those who are not introduced yet to Bitcoin, as well as deepen the level of understanding that people who already may know a thing or two about Bitcoin. And to do that, I want to go over first your understanding of Bitcoin and your reasoning for being so optimistic about its prospects. And then, in order to deepen our understanding even further, I'll play devil's advocate and try and see what are the responses to arguments that may be in people's minds about Bitcoin. So we'll start with, what is Bitcoin? Like, if someone doesn't know anything about Bitcoin, how would you describe Bitcoin to that person?
Bitcoin is a software that works to operate a payment network that runs on a peer-to-peer basis. And this is a very important concept of peer-to-peer, is that, we have a lot of networks. You're part of a lot of networks. You're in Facebook, Apple, Google. All of these things are networks, but all of these networks have an admin and a user. And so as a Facebook user, you have no control. You have some degree of control over your profile, but you don't have a lot of control over, you don't have any control over the company and over the network overall. So any day they could decide to suspend your account, they could decide to change your experience. And that's, of course, perfectly fine in that context. It is a business and people seem to be using it. But it's distinct from the peer-to-peer nature of the network, or peer-to-peer networks, which are things like BitTorrent or Bitcoin, in which anybody who runs the code becomes an equal member on the network. And anybody who runs the code has the same privileges and the same responsibilities and the same capabilities that everybody else on the network has. So there are no admins, there are only users. Bitcoin is a network that is peer-to-peer, so it only has peers, it only has users, it has no admins. And it operates a payment network, and that payment network has its own currency. And the reason I think Bitcoin is extremely important is because that currency is the hardest money that has ever been invented. It is the hardest form of money that has ever been invented. And I think this is going to be an enormously consequential civilizational invention that is going to be enormously important for the world, because everybody in the world now can use this, because it's digital, it's entirely digitally native, and there are no admins and there is no single point of failure. So there's nobody you need to rely on. Anybody can use it. If you just download the software, you use it. And if you use it, you're able to access a form of money that there's never been anything like it before, because nobody can make more of it. There's a limited fixed quantity of it, and the quantity is produced at a set schedule, and people can only produce more of it at that schedule. So there's no way of anybody increasing the supply. So effectively, anybody has the ability to save for the future. And this is what I think is so enormously significant about Bitcoin, because we've spent a century in which governments have taken away from people the ability to save for the future by taking away their gold and forcing them to use paper money, fiat money, and credit money, and all these horrific inventions. And that's destroyed people's ability to think of the future and the long term, and made people far more present focused, far more short-termist in their perspective, so more high time preference, in other words, heavily discounting the future. So Bitcoin offers everybody in the world access to the best form of money that has ever been invented. And I think that's going to be a huge deal.
So I think initially when people hear about this description where, you have a payment network, it has no admins, just users, a couple questions pop into a person's mind. Number one is, well, how did this thing start? And if there's just users, there's no admins, how did it actually start? And number two, if there are no admins, decentralization definitely sort of makes it robust in a sense, but also who's responsible for development of this payment network, who's responsible for maintaining this payment network. This is a structure we're not familiar with. So perhaps you can educate us on the answers to these questions.
Okay, so for that, I recommend, obviously, the topic of Bitcoin is an extremely complex one, and so I won't be able to cover all of these issues in detail, but I highly recommend reading about it, and reading about in particular the way that open source software projects work. So a lot of the software that you use every day, you may not even know it, but it is integrated into your browser and operating system and phone. A lot of that software was developed through open source collaboration. In other words, people are interested in some kind of functionality from their computer. They'd like to build it, so they set up an online community, a forum where they discuss it with people who have the same interest. They provide code, they iterate on it. Anybody can use it, anybody can change it, everybody proposes changes, and everybody reviews everybody's changes. And then the end result is anybody can, use the code. Anybody can fork the code in a certain way. Sometimes these things get appropriated into companies that can appropriate them and turn them into a private centralized software. But in some cases, it just continues to live as an open source project online. So Bitcoin is one of these. And the history of the attempts to build digital cash is a long one. So people have been working on these problems since the 1970s. And there have been many attempts and many solutions proposed by different people, and many steps of progress that have been made along the way. And then in 2009, somebody made this contribution, which, it was just one of many. There had been many before. Somebody who was anonymous made this contribution and then disappeared, but it worked. And the amazing thing about it is that, and this is why it works because the person is anonymous, and it works in spite of him being not there. That's why it works. This is really the important thing about it, and what distinguishes Bitcoin, in my opinion, and in the opinion, I think, of people who really understand what is going on. This is what distinguishes Bitcoin from all the other digital currencies, in that there's no CEO, there's no person in charge, there's no guy you can talk to. There is no person who's out there on Twitter or on YouTube saying, this is what we're going to do with our currency, we're going to do this, we're going to change it, we're going to make it, we're going to do this. There is nobody. And the history of Bitcoin, and again, this is something that is well worth getting into. The history of Bitcoin is full of people who had some kind of role in the software development process or in the early growth of the network, assigning to themselves these roles about needing to intervene and needing to be in control and needing to make changes, and essentially veering off to the path of insanity, because the code is not something that any one individual can control. It's essentially functioning as a consensus, in that everybody agrees on these parameters. And so you only are able to make changes. You can propose changes, all the changes you want, but you're only able to make changes if everybody chooses to adopt your changes. And so the only changes that get adopted are ones that do not compromise the essential and most important critical parameters of the network that allow everybody to be compatible with one another. Most important of these is the money supply. How many coins are there and where are they? And that's really the most important thing. So everybody has to agree on these things. And if you break away from this, you break away from the consensus rules that were laid at the beginning, then your Bitcoin is no longer operable with the Bitcoin network as it was at the beginning. You're on a different monetary standard, and effectively you're part of a centralized network where you're the admin. So over the last 13 years, what has happened is that Bitcoin has accumulated all the people who are interested in being users of a peer-to-peer network, whereas all the altcoins have accumulated all the people who are interested in being admins and the people who are running centralized platforms. So Bitcoin has really proven itself, and this is why I discussed this to some extent in my book, The Bitcoin Standard, but read about the year 2017. There was something called the block size war, which was really informative in understanding just how Bitcoin operates as these sets of rules which you can use, but you can't alter. It's almost alien to the modern mind, because, we think of technology as something that is almost up to our whims and fancies. It's what I want. I want this to be done as I want. And everybody who comes at Bitcoin with this mentality of, all right, let's look at it. All right, what Bitcoin should do is they need to increase the block size so they have more transactions. All those people end up being massively frustrated because they think the issue here is, simple engineering issues, whereas the important thing is compatibility with everybody else and sticking by the consensus rules. And that's what because maintaining this maintaining this kind of immutability where everybody agrees to those rules is the only reason that we can maintain the integrity of the monetary system, which rests on the supply. So if, as long as the thing works, everybody who is just looking for monetary integrity can find it in Bitcoin. And therefore, as long as of course they don't want to change Bitcoin. And so all the people that are interested in being free from inflationary manipulation would gravitate toward Bitcoin. And that's what makes it so hard to change, because those people are there precisely because they don't want anybody to mess with their 21 million. So, so to answer your question, this is, I think, what in terms of the development of Bitcoin has made it such a different prospect from other projects, because it doesn't have a central point of authority. And when we'd had other forms of digital money, they always had a central point of failure. There was always an individual in the middle that the government could arrest, and then the whole thing falls apart. And Bitcoin was built by a person who was anonymous because he built it on this idea. He built it on an idea that it doesn't have to trust in anybody. So it was built as an experiment that would only work if the person who did it wasn't known. So he didn't use his name, and he disappeared. He used the fake name and he disappeared. And nobody knows who he is or what's going to happen. And I think it's at this point, it doesn't really matter, in the same sense that you use a car, but you don't know who invented the wheel. But the wheel works. It doesn't matter if you know who it is. And this is what Bitcoin is. It's software that you run yourself. You know, you choose which software to download. You can audit the software yourself. And the person in charge is no longer there, and it's worked without him. And the other thing is, the software is constantly being audited by thousands of people worldwide. And the more the network grows, the more people who are not friends and not allies and who don't trust each other join the network, the more new eyeballs you get who go through it and understand it and analyze it. And we're constantly seeing more and more people get into this, let's study this properly and figure out how it works. And so far, it's gotten the approval of a lot of individuals, but also private companies and also governments. So 2 governments have announced that they're going to be using Bitcoin as part of their official reserves, El Salvador and Central African Republic. And Tesla has Bitcoin, which is one of the biggest companies in the world. MicroStrategy is $1 billion company that's listed on the NASDAQ. It also has Bitcoin. It has billions of dollars worth of Bitcoin. So these people, they're not making these purchases out of the blue. They're hiring serious due diligence to look into the code and to ensure that their money, because they're putting it in code. They're putting their very hard-earned money in software, and obviously they're not trusting anybody, and they're not getting any kind of government safety net that's telling them, buy your Bitcoin and we'll guarantee it that you're going to get your Bitcoin, you're going to get your dollars back if you put them into Bitcoin. They're entirely trusting in code. So Tesla's already done it with more than $1 billion. MicroStrategy's done it with close to $3 billion, I think, or something like that, and it's working. They've done their due diligence, and the network hasn't failed them. So it's very difficult to explain the network from a technical perspective in a brief podcast like this, obviously. And there's an enormous amount of material out there that explains it. Videos on YouTube, my book. Incidentally, my book is available for free on my website in Arabic, saifedean.com/Arabic. You can find my book for free, as well as a few good introductory articles how to use Bitcoin that were written in English, but I've translated them to Arabic. You could use these and get a good idea about how to go about using Bitcoin. So, but I think, the important thing to keep in mind is that this thing is working. And so at some point, the skepticism here can be counterproductive. Well, it's extremely counterproductive. There comes a point at which, if everybody around you is able to use cars while you're still skeptical because you think that's just because there's a genie inside the car, and one day the genies are going to get angry and the cars are not going to work, so you're not going to invest in one. I mean, you can only maintain that kind of faith for a while, but then eventually life becomes more and more difficult when everybody's using it. So, this is, I think, the thing that I would urge people who have some kind of technical objections to Bitcoin, particularly people who don't, who arguably don't have a lot of experience in computer software engineering. Generally, they can be very easily skeptical of this and come at it from the perspective, oh, well, everything has been hacked, everything can be hacked. I'd urge them to study this before passing judgment on it, in that look at the technical aspect of Bitcoin and how it works, and look at the people that have studied it, and look at what they've said about it, and why is it that such a growing number of computer and security experts worldwide are studying it and coming up with no obvious failures and finding no way of attacking it or derailing it.
Without going into any technical details, if you could say, when you mentioned that developments in the Bitcoin software happen by consensus, who is offering their consensus? And by consensus, do you mean majority, or do you mean 100%? Or how is that governance actually?
Yeah, basically, it's consensus means that anybody who is on the network, who's able to make payments on the network, whose payments need to be accepted on the network, has to abide by the rules of everybody else. There needs to be one set of rules that makes everybody else compatible. And if you mess with one of the parameters that makes you incompatible with everybody else, then you're just not part of it. So it doesn't really make sense to talk about what percentage. I mean, I guess you could say 100% of the people who abide by the same rules get to be on the same network. So you can't you can't have a you can't have people on the same network abiding by different rules. You just have two networks. Then you'll split the network.
I guess what I meant was like any sort of development in the software itself. So you mentioned it was open source software, and basically, developers were contributing to the code. But if before the code is actually committed, to the actual program, and let me know if this is too technical. But before the code is actually committed, like what needs to happen in order for that, in order for that new code to be committed?
Yeah, well, I mean, there are forums in which in GitHub essentially is a place where Bitcoin coders discuss these things, and they make proposals for things that they'd like to work on, and then they review each other's works, and then after a very thorough process of a lot of independent people going through things, they could propose something as a software, and then they put it up as Bitcoin software that you as a user can choose to adopt, but you don't have to adopt. You can always change anything you want with it. So there is a development process that is not centralized in any meaningful sense, in the sense that there's no corporation that is in charge of it. There's no person in charge. It's just volunteers and people who are paid by Bitcoin businesses and Bitcoin companies to work on things, to maintain the code and to maintain and ensure that it runs well. So there is a process within within GitHub of how to submit proposals for changing Bitcoin, and there's a process for review. But ultimately, you decide what software you run on your computer. So you decide what kind of Bitcoin you want to have, and the only way to continue to have a Bitcoin that is interoperable with everybody else, and the reason that the Bitcoin network has survived for so long, is because it sticks by the basically important consensus parameters that were there at the beginning in terms of how the network is run, at least economically.
Got it. I've seen you mention on numerous occasions that you felt Bitcoin was sort of anti-riba, or anti sort of interest and the interest-bearing loan system that we have with our current fiat currency. If you'd like to sort of expand on that thought, please.
Yeah, I think this is something that is becoming increasingly intriguing for me, because I think Bitcoin is a far more sharia compliant form of money than the money that we use every day. And I think the implication for this is enormously important for the Muslim world because, first of all, Bitcoin, studying Bitcoin allowed me to really understand money properly. And then after studying Bitcoin, I studied fiat and how the fiat monetary system works. And that was the topic of my second book, The Fiat Standard. And the conclusion that I came up with about how fiat works is, I think, enormously significant for the Islamic world, because the way that the system works is not just that the money itself is used in riba and usury. It's not that it's just that you can use dollars in usurious lending. It's that dollars themselves are only created through the process of riba lending. So in order for dollars to come into existence, somebody needs to take out a loan. That somebody is either an individual or a corporation or a government. And a lot of debt is being taken out constantly by individuals and corporations and governments in the fiat system, because creating debt, issuing debt, taking on loans are similar to mining Bitcoin or mining gold in the Bitcoin or gold monetary system. In other words, when you dig a hole and you find a gold nugget, you've increased the money supply in the economy, and effectively you've devalued everybody else's gold. Now, the reason gold works well as money, the reason gold is historically chosen as money, is precisely because it's very difficult to find large quantities of gold that can significantly devalue everybody else's holdings. That's why other things don't work well as money. And that's why copper doesn't work as money, because it's very easy to find a lot of copper and bring it on the market. And I discussed this in a lot of detail in the Bitcoin standard. And in the fiat standard, however, if you think about how it works in the fiat system, it's not hard to mine fiat like it is hard to mine gold, because you just need to issue credit, and you have an entire financial system that's geared toward the issuance of credit, and everybody wants to issue credit. So the issuance of credit increases at a much faster rate than the issuance of gold. And that's why money loses value a lot more in the fiat monetary system than it did under the gold standard. And that's why people can't save for the future. But the implication here is that, issuing a loan or taking out a loan in a fiat monetary system is the equivalent of finding a gold nugget or mining new Bitcoin. But the difference is that it's expensive to mine Bitcoin and gold. You can't just find free Bitcoins or free gold running around everywhere. That's why they're good money. Whereas with fiat, it's very easy to be able to take out a loan or issue a loan. And so everybody's always trying to take out as much loans as they can in the fiat economy. Everybody wants to take out loans, to the point that, in the Islamic world, this has just become accepted. And a lot of scholars even say that this is accepted in the modern monetary system because there's no way around it. And I'm not a sheikh, so I don't have strong opinions on how I think on this. But I can certainly sympathize with the perspective that you're essentially sabotaging yourself economically if you don't partake in the fiat system. Because if you don't partake in the fiat monetary system, by not taking out loans, if you want to buy your house with cash, if you want to buy all your property with cash, you are saving money that is losing value. So you're choosing to donate wealth all the time to everybody out there who's taking out loans. So you're still involved in riba. If you're holding government money in any form, you're still involved in riba. You're just paying for it. You're paying for everybody else's riba. You're witnessing the value of the house that you want to buy is constantly going up, and your savings are never keeping up with it. Why? Because you're paying for all the people that are actually buying that house and the house like it on credit, because they get it at a much lower rate, because they get it with borrowed money, and their debt declines over time. The loan amount. So let's say the house is worth $1 million. You need to work up to $1 million with a melting ice cube. The money that you're saving is losing value. They take out the $1 million, they borrow it, so the money that they owe is diminishing in value. So the value of their debt is declining. So it's incredibly easier to buy a house with credit than it is to buy it with savings. And so you can understand why, under this kind of fiat monetary system, why Muslims would do this, because there is no alternative. It's very difficult to have an alternative because, gold doesn't keep up with inflation very well anymore. And even if you did save in gold, you can't really move gold around like you can move fiat. You can't pay your business bills with gold. You can't pay people in another country with gold. We don't have gold banking, and governments have done a very good job ensuring that we don't get gold banking because it's not in their interest that we have gold banking. So they want to because they want to maintain this monopoly. So they prevented the Sharia compliant alternative, which Muslims would have used. Muslims worldwide would have, if we had an alternative, if there was a free market in money in the 20th century, Muslims worldwide would choose a gold-based monetary system. Maybe silver, but I don't think silver would survive in front of gold. People would eventually end up on gold. But people would use a gold-based monetary system, and it is entirely possible to build a digital payment system based around physical gold, with only occasional physical gold clearance between banks and central banks. But the reason that it doesn't happen is that central banks don't let it happen, because it's far more profitable for them to run a monetary system based on their debt, because that just allows them to keep borrowing and keep spending, and it allows them to subsidize all of their cronies and buddies. So it's an enormously corrupting moral influence on society, inflation, both because it destroys the value of the currency, destroys people's incentive to think of the long term, but also because it empowers the government to have an enormous amount of resources to shape society as it views. And so that's why government then becomes extremely powerful, and then they choose to impose their vision on things across society because they have the money to force those things. And they try to hide the effects of inflation by telling people to eat cheap food, and they try to hide the effect of inflation by telling people to use sustainable, which is another word for pre-industrial forms of energy. So don't consume oil, live on windmills like medieval peasants used to live, and don't enjoy all the modern technology because that stuff is expensive with inflation. So you have this double evil, where we're taking away wealth from people in order to finance this endless evil of riba system and finance government. And Muslims have no choice but to partake in it effectively, but those who don't effectively end up subsidizing it. So effectively, you can think about fiat as being a giant tax on Islam. It's a giant tax on people who have a problem with riba. It's a giant tax on people who have a problem with usury, because these people don't take part in this debt, and then they end up subsidizing everybody else. And whatever your views are, before Bitcoin came about, whatever your views are, I think is now a different question. Whatever your views were about riba and fiat money before Bitcoin is one thing. Now it's something else, because now you do have an alternative. Now with Bitcoin, you do have an alternative that is 100% free of riba. There's no riba involved in the creation of Bitcoin. And that's, I think, makes it extremely different from fiat money. And also, it's extremely beneficial to hold Bitcoin. It's much better to hold Bitcoin than to get into fiat riba debt in the long run, Yes, you can make good returns by going short fiat and borrowing, say, at a 4% and investing in things that yield 10%. Well, but that's 6%, These are rookie numbers in Bitcoin world. Like Bitcoin is doing something like 170% a year over the first 11 years. On average, a compound annual growth rate of 170% over 11 years. So that's enormous.
I think people at this point would just be content with their purchasing power staying the same and
exactly
depreciating.
Exactly. And this is the thing. So you can opt out of the fiat monetary system. You can hold on to your Bitcoin, watch your Bitcoin appreciate more than if you had gone into debt and used your collateral. Instead of using the money to get into debt, you save the money in Bitcoin and you watch it appreciate more than the value of the returns that you get on investing in the fiat world. And by doing that, you benefit financially, but also you starve the beast. You don't take part in the fiat Ponzi, and you don't help it grow. So I think it's a pretty compelling case for Muslims to look into it, because I think the objections that a lot of Muslims have toward Bitcoin um, stem primarily from not quite understanding what it is, in that people see that the value goes up and down and the price goes up and down, and they think, this must be a scam, this must be a Ponzi scheme, this is just another one of those things. But the thing that distinguishes Bitcoin from all these scams and Ponzi schemes, why it cannot be like them, what is different fundamentally about it, is that nobody has a way of making more Bitcoin. Nobody has a way of increasing the units of the Bitcoin network, of the claims on the Bitcoin network. There's no way that one person can find a way of making more. And we've had that running for 13 years now, and we haven't had one person figure out a way to change this. And again, if you understand how it works, you see why it doesn't work. You see why, in a sense, saying that it can be changed begins to look a little bit like, again, having crazy ideas about cars being driven by ghosts rather than machines. And so there's a very mechanical process that takes place with the numbers. Once you understand how the cryptography works, how the process works, it's an extremely reliable thing. And we can very confidently say there's not going to be more Bitcoin, which is, as long as there's not going to be more Bitcoin, and as long as you can maintain your Bitcoin, then nobody else can force nobody else can force inflation on you. Nobody can devalue your coins, and nobody can force you to take part in any kind of inherently haram activities with your Bitcoin. That's the difference between it and fiat. So if you hold fiat money, you are effectively subsidizing everybody else's riba and usury loans. If you hold Bitcoin, you hold your own Bitcoin. It's like a pot of gold that you hold, and that's it. And nobody's borrowing against it. Nobody is using it. Nobody's devaluing it. Nobody can take it away from you. It is exactly money in a very Islamic sense. And by now I've done 3 podcasts on this topic. I did one, and I urge listeners to check this out on my website, saifedean.com/podcast. On my podcast, the Bitcoin Standard Podcast, you'll find there's an episode with Haris Irfan, where we discuss why he thinks Bitcoin is the most Islamic form of money. And where another one with Safdar Alam, where he gives his perspective on his problems with the industry of Islamic banking and why he says they don't really, and I think he makes a very compelling case for why what passes for Islamic banking today is really just Islamic whitewashing of clearly forbidden riba lending. And then a third one with Tariq al-Diwani, who has written an excellent book on the problem with interest, making the Islamic case against interest. And I've had a very interesting discussion with all 3 of them on Bitcoin from this perspective.
That's great. I think this is a really useful viewpoint for people to see, and perhaps they haven't really thought of it in that perspective. Although, not everything that ends up serving maqasid al-sharia necessarily has to come from, someone intending to do something Islamic. And, in the case of Bitcoin, it's very possible that this is something that serves maqasid al-sharia quite well, especially as it relates to people being able to save their money in a way where, their purchasing power is preserved over time. On this topic, I wanted to ask you on the topic of max supply of Bitcoin. I sort of see this as it's a great feature if you want to use Bitcoin to save your purchasing power, but if you want to create a currency, you wouldn't necessarily cap its supply somewhere, because then you basically disincentivize people from actually spending it. You incentivize people to actually just buy and hold. What's your thoughts on this? Do you actually think Bitcoin will be a currency like people use in their day-to-day transactions to buy and sell things? Or do you see it as really a store of value, and then when you actually want to transact, you use something else?
I think at this stage, Bitcoin is going to be primarily used as a store of value. People are not going to be using a lot of their daily transactions, Bitcoin for a lot of their daily transactions. And I see it as a kind of horse before the carriage problem, in that What matters in this issue is how much of people's cash balances are in Bitcoin versus other currencies. And currently, if you live in the US, for instance, everybody around you runs all of their cash balances in dollars. So all of their payrolls, all of their incomes, all of their receipts, everything is in dollars. So the idea that they're going to start taking Bitcoin is not a straightforward process, because everybody who's paying them is paying them in dollars, and everybody they pay is getting paid in dollars. And so if you have complicated and sophisticated production, if you're a big firm and you have plenty of suppliers, this isn't an easy change to do. And ultimately, it doesn't quite matter what the currency is of the exchange. So, and it can be done in a trivial sense that, you could set up an account with a payment processing company that accepts a Bitcoin on your behalf, sells the Bitcoin immediately, and buys dollars for you and gives you dollars into your bank account. So you could do that, but as long as you're holding dollars, then it doesn't really matter. What matters is the kind of cash balance. So I think the way that I see it and the way that I explain it in terms of the evolution of money historically is that the thing that has the hardest supply to grow gets used as the most common store of value, either because people recognize this, or even if they don't recognize it, just because the people who don't use it as a store of value, which is witness their wealth go away. So people can use anything as money, but the only people that are going to keep their money for a few generations are the people who use something like gold. So within a few generations, everybody ends up on gold, basically, because everything else is constantly increasing in its supply more and more, and so losing value more and more. So people either lose their wealth or realize the mistake and switch to gold. Effectively, you end up with one dominant money, which is the hardest thing to produce. And then because people use that as their store of wealth, their cash balances in that continue to grow. And then they start taking payment in that, and they start making payment in that, when that is the predominant cash balance. This is what it is to be the money. So currently, of course, the dollar is far larger than Bitcoin. And so for the vast majority of people, the odds of the person that you're transacting with being a Bitcoiner is less than 1%, or the percentage of their balance sheet that is going to be in Bitcoin is likely very tiny. So at this point, you're not going to see as much daily transactions happening with Bitcoin. At this point, people are accumulating it as an asset and whose value grows up. However, in the long term, I don't see how this process is resolved in any way other than this hardest money becoming the money that is used. Because why would you want to accept payment in other forms of money? You'd only accept other forms of money if you could sell them and hold the thing that you hold on for the long term. So I think in the long term, Bitcoin, the thing that has the most cash balances is the thing that ends up being used for payment. That's currently the dollar, and it's currently something in the range of about 200 times larger than Bitcoin. 100 to 200 times larger than Bitcoin is the amount of money that is in dollars and dollar-denominated other fiat currencies. It's about, Bitcoin is currently around 0.5% of the global money market. Once it's more than 50%, then it becomes the money that people prefer to get paid with. But that's a way away, and that's only going to come about after a significant appreciation in the price of Bitcoin. Now, go back to your first question on whether it is good for the money supply to go to be limited. This is something I discuss in depth in both books, and as I'm sure you know, I think one of the major problems with modern economics is this idea that they propagate that money supply needs to go up in order for the economy to work. And for me, this is exactly like saying we need to keep expanding the meter every day in order for children to grow taller. We don't. Children can grow taller without the meter increasing, and so we don't need more money. There's no such a thing as a shortage of money. Any quantity of money is enough. You could run the entire global economy on a supply of $100 trillion, or $100 billion, or $100, or 100 cents, as long as the cents continue to be divisible further and further, and you divide them into smaller units. So the absolute quantity doesn't matter. What matters in money is its purchasing power. And the purchasing power is what people seek in money. They don't seek more numbers. People would rather have $10 than 100 Japanese yen. You're not going after higher numbers. You're going after the purchasing power. And $10 are worth more than 100 Japanese yen, so people would rather have them. So, according to the Keynesian perspective, people choose to spend money because they expect their money to go down in value. And so we need to make people, we need to take away the value of the money in order for people to spend. But I think this makes no sense. People spend because they need to consume and they want to survive. The reason we spend is because, if you don't consume anything today, you starve and you die. So, yes, if you wait on your money, it's going to appreciate 5% next year. Does that mean that you're not going to buy anything this year? No, you will starve and die. You still need a home to shelter you in the winter. You still need food to make you survive this year to get the next year's 5% bonus appreciation. You still need some semblance of clothing, probably, to survive. So you are going to spend money on those things. Even if you can get 5% more food next year, you're still going to spend money this year. Now,
but in the case of like what you're mentioning are like necessities, like you're not going to spend on food, on housing, even if the value of the asset in question is going up 5% or 6%. That's true. However, if you know that if you have a high degree of confidence that the asset is actually going to appreciate in price, even to the tune of 5-6%, you're less inclined to spend on anything other than necessities if you can. I think
you say it like it's a bad thing. I mean, like think about it. This is exactly the problem with the modern world, is the consumerism. And why is this consumerism such a major problem? Why do people spend so much money? Why do people not save their money? Because their money is losing value, because it makes no sense to hold on to the money, because your money is going to be losing 5-10% per year. And so therefore, if you hold on to it today, you're going to get less stuff tomorrow. You're going to get more expensive food tomorrow. You're going to get more expensive everything tomorrow. So it makes sense to spend all of the money that you have today. And that's what's destroying people's ability to provide for their future, because you're taking away their incentive to save, because you're destroying their saving. And so you're incentivizing them to become high time preference, to become materialistic about the present, to spend all their money, to focus their life on the life of excess consumption. So the Keynesians are correct in identifying the direction of this. And this is, the entirety of the idiotic Keynesian propaganda that is taught in university rests on justifying inflation. They need to justify the inflation. But the reality of the matter is that nobody needs the inflation. Nobody needs the inflation except them. They are the ones who need the inflation. The economy doesn't need the inflation. If the value of money goes up and you expect that things would become cheaper in the future, yes, you're going to save more and you're going to spend less, all else being equal, but you're not going to spend zero. So what happens if people stop spending money on stupid nonsense that they don't need and instead save more? What do you think is going to happen? They'll be more financially secure. They'll have fewer stupid plastic nonsense toys that they don't need, but they'll be more financially secure in the future, and they'll have more ability to provide for their future, and therefore they'll think more and more about their future. And more importantly, the fact that they're saving means, because we're not spending money on these toys, where are the savings going? They're going into investments. So they're going to then generate more capital goods. The more savings we have, the more of our savings we can dedicate to investment. And therefore, the more investment, the more capital goods, the more of an increase in productivity. So effectively, what the Keynesians are trying to say here is that the economic problem is that people don't want to consume enough, and we can fix that by preventing people from saving and forcing them to consume. When the innate desire of all living things is to consume, all animals wake up looking to eat, and all humans want to eat and consume, and they want nice things, and there's no shortage of demand. Everybody wants all those nice things. The shortage is in our ability to produce and in our ability to sacrifice present consumption in order to acquire capital goods, in order to make those capital goods produce more goods. So the only reason we have such a high living standard today is because we've spent millennia as a species accumulating capital to increase our living standard, to increase our technology, to increase our capital stock, increase our productivity. And that all comes not because we don't have enough spending. It comes because we reduce our spending. And so we consume less needless nonsense, and we have more capital and we accumulate more capital. So the Keynesians are correct in identifying the direction. Yes, if we got the inflation out of the money, we would indeed have a lower supply growth rate of the money, or a zero supply growth rate of the money, and that would translate into an increase in the value of the money over time. Money buys you more things. People would spend less frivolously, but people would still spend, and we'd have a lot more capital. And so we would have a lot more productivity, and we'd have a lot more abundance and a lot more production. Effectively, they're describing the process of civilization, the process of economic development and production, as if it is a problem. And they're saying that the solution is to reverse it, to take away people's savings and to make them consume today. Essentially, they're telling us to eat the seed grain. This is ultimately what modern fiat Keynesian economics comes down to. If you eat the seed grain, you're going to be happier than if you only eat the grain that was for eating. And don't worry about tomorrow.
I mean that I certainly agree with you on the issue of inflation not being necessary. My point is that I think deflation would also probably be counterproductive as well. The ideal currency would be one that just maintains its purchasing power over time, in which case you would have to increase its supply in tandem with the increase in goods and services.
But why?
Because when deflation happens and people don't spend as much, you're essentially lowering the returns on investments that are possible. And
that's not true. That's exactly opposite. And on the contrary, when you're
because there's no demand for
there is demand. There's always infinite demand. No. There is always an infinite amount of demand. People, there's no shortage of people who want Ferraris out there. We could keep making Ferraris forever and not satisfy people's demand for Ferraris.
If the return on the currency, let's say year over year, let's say the return on the currency is 10%, for example, then every investment opportunity, let's say the return on Bitcoin is 10%, it's stabilized around 10%. Then any investment opportunity that gives you less than 10% is one that you're not interested in.
Exactly. So what do people do? They will only invest in opportunities that offer more of a return than the holding of the money. So all the capital will be dedicated to the highest productivity opportunities and not be wasted on opportunities that are effectively destroying capital at this point. The other thing to keep in mind is that
but if its return is positive, if it's returning like 6-7%, why should that investment opportunity cease? That business activity, why should that cease?
Because it's
not encouraging it.
Because effectively it's destroying capital, because it's bringing back less capital than you would hold, because it's negative real returns, it's negative nominal returns, it's destroying capital. You just hold on to your Bitcoin, the Bitcoin appreciates in 10%, as you're saying, and in that situation, investing a return that brings you 6% is going to mean that you get fewer Bitcoin at the end. So that's not going to get funded.
Do it, right?
Exactly.
Isn't that bad for the economy?
No, that's good. That's why you want to get rid of these investments. I mean, effectively, what you're doing with fiat is you're telling people that your capital is going to be losing 5% this year. And so therefore, any productive activity that will only destroy 3% of your capital is profitable. So people will put their money in things that destroy capital because you're destroying the alternative.
Inflation or deflation.
Well, that's a purely theoretical construct. There is no such a thing as a fixed price, because nothing is fixed in economics. The price of everything is always going up and down, and the supply of all goods is going up and down. Now, historically, what does get selected as money? This is the problem with this argument: is that what it's saying is that the way that the market has historically chosen money over thousands of years is wrong, and the way that this criminal pedophile from England in the 1930s says that the money should work is right. This is ultimately what this argument comes down to. Like historically, everything that gets chosen as money is the thing that is the hardest to make. Why? Because people don't want to lose value. The whole point of holding money is that you want to hold the thing that gives you the best value into the future. So the notion that we have these Keynesian overlords in the 20th century telling us, no, 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 what you guys need is not to have the thing that holds on to your wealth best. The best money is the one that leaks value best. And that's how we can get this magic machine that is called the economy to run most efficiently and make the highest GDP numbers. This is all fraud. This is all fiat. This is all riba. This is all haram. And I mean, this is lies of the highest order. And it's deeply criminal because it is what's the basis of the entire financial system of the world today is built on this idea that that money needs to constantly be created. And who obviously benefits from that idea? Who likes that idea? The people who create the money. That's it. That's a bunch of stupid stories that they made up to try and convince people that it's for your own good that we're devaluing your money to give ourselves money. You know, we're printing our money, we're printing this money to finance government spending. We're giving banks this enormous advantage over society by allowing them to print money and making this enormously profitable business to the small industry, small section of society. But trust us, it's actually for your own good, because if we didn't do that, your money would gain value and then you would be rich in the future. You know, your money would hold on to its value and in the future you would be able to afford things. But don't worry, we're here to save you. We're taking away from you your ability to afford things, your ability to save and buy a house, your ability to pass on wealth to your children. We're taking all of that away from you, so making sure that you and your children will always be working as debt slaves forever, paying taxes and paying interest and benefiting the people who benefit from the system. There is clearly, I mean, the way that the money works, the idea initially that I was trying to get at is the way that people choose is they choose the thing whose supply increases the least. Okay. And so the people who choose that end up having more money than the people who choose other things. So inevitably, the wealth ends up in that thing. That's what ends up being chosen as money. We don't have a mechanism for society ending up choosing an inferior money. You know, why, if this was the case, why didn't people up until the 18th and 19th century not use copper over gold? Why did gold win and copper lose? If the inflation is good, why can't we just use copper?
Yeah, and I don't think anyone would necessarily argue that inflation is good. Yeah, I think that money, like when you use the term as like a medium of exchange, it makes sense to me that since it's serving this purpose as a medium of exchange to exchange things, that the need for it would increase the more things there are. So the more goods and services there are, the more that thing is needed. But I do agree with you that the thing that does win out as sort of a savings mechanism is that which can prove itself to be like rare and incorruptible. And I think perhaps we haven't seen anything like Bitcoin in history, and from that perspective, I think there's likely a good possibility that it wins out as a saving mechanism for humanity. My question to you is: you do think it's a wise financial decision for people to save using Bitcoin despite its volatility, right?
Yes, I think the key thing to understand with Bitcoin is that it is a long-term thing. So the what you're betting on is the scarcity. I wouldn't say betting on, but what you're buying here, effectively the value proposition from buying it is like buying gold. You're buying gold because 10 years from now, you pass this on to your kids, 10, 20, 30 years from now, no one will have found a gold printer that will have made an enormous amount of gold and devalued those things. So the value of your gold may go up a little bit, it may go down a little bit, depending on the market, depending on all kinds of different things. So when your kids want to sell it 30 years from now, the value may have changed a little bit, but the value won't have collapsed because nobody has a way to print large quantities of gold. Bitcoin is that. Bitcoin, you're buying the fact that that you have a limited quantity of that network, and as long as the network continues to work, then almost certainly with time, the value of that token is going to appreciate because the rate of production is declining. Currently the rate of production of increase in Bitcoin supply is around 2%, so it's similar to gold. It used to be much higher and it's constantly declining according to schedule. So now we're at 2%. We're going to drop to around 1% by the end of 2025. 2025 is going to be about 1%, and then it's going to keep dropping by half every 4 years, which is what it's been doing. So you're effectively buying in this idea of money that can't be corrupted. You're buying into a form of money that beats all the other forms because all the others can be corrupted. The government money is corrupt by its nature. Gold can be corrupted because governments control the clearance in it. So with Bitcoin, you're buying in the fact that nobody can make more of this, and so you're buying it for the long term. So don't buy it for the short term. I strongly urge people not to speculate on Bitcoin in the short term because you could really get hurt. Like you could buy Bitcoin and then in a few months' time it's down 50%. So if you're planning on, say, for instance, you're saving up for buying a car or a house, and next year, and you said, all right, let me put all of the money in Bitcoin now so that I can sell next year and get a bigger house because I'll make more money in Bitcoin. Don't do that. Put the money in Bitcoin that you want to hold on to for 4 years, that you can wait on for 4 years, and then you can be fairly confident that in 4 years' time you will be up. So far in Bitcoin's history, basically nobody's been down on a 3-year basis. If you waited 3 years, you're up. If you waited 4 years, you're up at least 100%, 120% or something like that. So this is what you're really betting on in the long term. Holding on to it for the long term will outperform pretty much everything. This is the thing. All the other alternatives, if you put money in stocks and bonds and real estate, sure, you could make returns, but you can't really beat inflation. You definitely can't beat Bitcoin on the long term. So I would begin with putting in the part of your savings that you want for the long term, and then accumulate periodically from your income with an amount that you think of for the long term, 5%, 10%, something like that. And then continue to grow your position. If you enter in this kind of way where you're not risking any money that you need over the next few months for any major life expenses, and you have an emergency fund, then you're protected from the volatility. Then you know that your money, all right, it goes down, it can go down, it can go up. Tell yourself mentally that this is for the long term. So if it goes down, you're not going to panic and sell at a loss. And if it goes up, you're not going to panic and sell and miss out on future gains. You're just going to hold on. You're going to forget about it. And over time, as you increase your position on it, I think, as the value goes up and you increase your position, you increase your technical knowledge in how it works. You take custody of your own coins, you secure them without having to rely on any of the Bitcoin companies, and you become very proficient in that. And then essentially, I mean, I can't overstate just how important this is. You're effectively buying yourself and your children financial freedom. And then it's something that nobody really has today. Everybody has to work every day because they have no way of securing wealth for the future. Nobody has a secure way. If you ask people, how are you going to secure your wealth in 20 years from now? Well, where are you going to keep it? And the answer is you need to wake up every morning and listen to the news and try and take a guess of where you're going to put it, in this stock or this company or this bond. Bitcoin is the one thing that you can just throw it into and know that 20 years from now, it's the least uncertain thing there is, in my opinion. And the more you study it, the more I think you come to this conclusion.
And do you actually dollar cost average, or do you try to time the Bitcoin cycle? What's your...
No, I don't recommend trying to time Bitcoin because generally it's better to just keep, again, if you have a long-term perspective, then it's really these day-to-day movements don't matter. You just keep the long-term perspective on it. It becomes almost like following a spectator sport where, all right, you're making and losing money, but it doesn't really matter because that money is in a locked cage when we can't find the key for years. So, the key thing is this, this is the peace of mind that I talk about, which is what people had under the gold standard, which is what Bitcoiners develop right now. If you look at the culture surrounding Bitcoiners, there's a lot of people that just save in Bitcoin and then are able to be free mentally and financially to pursue something that they couldn't really pursue when living in the fiat or hamster wheel. So when you're on the hamster wheel, you can't save. And even if you're making a lot of income, and this is an extremely common experience among Bitcoiners, some people that are, a lot of the early Bitcoiners are, they needed to have some pretty advanced technical or above average capabilities in math and computer science and programming. And these people generally tend to perform well in work, and they can earn well. And then, but no matter how much you earn, you can't find an easy way of saving, and you have high uncertainty about how you invest it, and you're constantly, you're worried, you're thinking about your job and the thing that you're productive with, but you're also being a part-time asset manager, having to think about Netflix and Apple and Google and the Japanese central bank and the Russian war and all these other things, and how they're going to affect your portfolio. But but in the long run, effectively you're waking up and gambling every morning. And even if you're very smart, even if you're very good, even if you're extremely, extremely, extremely lucky, in the long run, you're going to struggle to beat inflation, and you will almost certainly not beat Bitcoin. So what happens is that, the Bitcoiner will just put the money in Bitcoin and then focus on their life and not follow the fiat world, not follow the, how do I keep making my interest payments? How do I keep running, all of this hamster wheel of maintaining that, ensuring that I could get the most assets for debt that I'm accumulating. And all of the, this is, the cost of debt, of course, is not just religion doesn't just warn against it for nothing. It takes a serious toll on a person. You lose your peace of mind when you know that you owe money, and when you have an uncertainty about the money, and you worry about the fact that you could lose your house. Even if it doesn't happen, the mere possibility of it being there is constant threat and a constant reminder. And if you switch from that to a Bitcoin world, you don't have to follow the news. You don't have to worry about making payments. You don't have to worry about those things. You just keep stacking more and more Bitcoin over time. And ultimately, this is the thing. A lot of people that are haters of Bitcoin, a lot of people that offer a lot of criticism of Bitcoin, 0% of those people will offer you a reliable plan that they will offer you today. They will tell you, do this, and you will outperform Bitcoin in the next 5 years. I challenge any of those people to show me how they've performed Bitcoin over the last 5 years, outperformed Bitcoin over the last 5 years, and how they want to do that over the next 5 years.
Have you heard of Luna token?
I'm sorry?
I said, have you heard of Luna token?
Yeah, that performed Bitcoin over the last outperformed Bitcoin over the last few months, and then so a lot. Incidentally, the good thing about it was that a lot of the people that talk badly about Bitcoin and Bitcoiners and say you should be open to all these other scam coin projects. Look at Luna. There was their favorite poster child about just how important and how big this important innovation is, and it's collapsed completely. Really, it's Bitcoin only. Bitcoin is the only thing that works in the entire cryptocurrency industry.
Interesting. I was going to ask you about your position on altcoins. So you see basically like no utility in any altcoin?
No, none of them. First of all, there's no utility in money besides the exchange. And the only thing that you need for that exchange is the reliability of the software and the reliability of the code. And the true decentralization that protects the monetary properties. That's the only thing that you want, because if you don't have that, then the whole thing falls apart like a house of cards. Like if you can change a digit of the supply number, if you could just add a zero next to the total number of coins and then print 10 times as many coins and take them for yourself, you destroy any of those networks, you destroy anything. So the notion that this kind of, that any of these networks is offering some crazy utility is nonsensical. There's no utility from digital information that's moving around. You could run a centralized payment network that is very trivial to run for all of these replacements. So really, all of these things are marketing apps that are not competing with Bitcoin. They're competing with AWS, and they're with Amazon Web Services, which is a very efficient, very centralized way of running apps. Pretty much maybe half the internet or a third of the internet, something like that, is running on AWS. A very big chunk of the internet is run on it because it's very efficient and it's very well run, and it's highly centralized. And there's a very good reason for that. You want most of your stuff to be centralized because it's more efficient to have things be centralized. The notion that we're going to need decentralization for any of the apps and any of the things that the tokens and the altcoin industry talk about, I think, is absurd. because none of these things justify the enormous excess cost of centralization. So running an app on AWS is about a millionth as cheap as running it on any of these supposed smart contract platforms. So the only thing that they're doing is that they use these buzzword stories about a decentralized economy and doing this and doing that. They use these as marketing to introduce a new token, which is just a new bunch of fiat Ponzi. Each one of those tokens is just something that a small group of people are issuing. And like with Luna, like with thousands of these other tokens, they just essentially, there's a small group of people that could control the supply. They issue it. The price goes up because they list it on exchanges where more and more people start buying it. And then the price goes up and they control the supply. In most cases, they eventually find a way of increasing the supply, bringing it down, increasing the supply, which brings the price down. They profit at the extent of the user. It's been a game that's been tried with thousands of times. And I challenge anyone to offer me a coherent case for why they would recommend their own mother or grandmother or aunt or uncle put their hard-earned life savings in one of those coins. How can they guarantee that those coins won't get this rug pull treatment, as we call it, which is, the government, the people behind the coin, just like governments, print a bunch of money and devalue the money that you have? Only Bitcoin can offer that guarantee, and I could sit you down and spend and give you 100 hours of reading and podcasts and videos explaining to you why, and technical writing explaining to you why I feel entirely justified in recommending this to my own mom and my own aunt and my own uncles. But I would completely question the sanity and integrity of somebody who recommends any of the other digital coins.
Got it. I do think whatever utility has been advertised for these coins, at least at this point, is in theory. I mean, no one is really using any of these coins for practical purposes as of yet. If they are, it's very limited in terms of scope. So to summarize your sort of position on altcoins, the main weakness is number one, the centralization, and number two, even if you attempted decentralization as a sort of a mode for offering these services, it's less efficient than a centralized version, right?
Exactly. And the only thing for which the cost of decentralization has so far proven justified is the function of money, because it is supremely unique in the amount of economic value to amount of digital data ratio. If I wanted to quantify, I should write this down. I think I should remember this as a note. Money itself is the most extreme outlier of this phenomenon in terms of, you can move with Bitcoin, you could move a $10 billion worth of value on 300 bytes of data or 200 bytes of data or something like that, which is how much a Bitcoin transaction takes. I think it's even less than that, 150 to 200, I forget the exact numbers. But yeah, a couple of hundred bytes of data and you can move $10 billion of value. There's nothing else that comes anywhere near close to that. With money, because it's a purely information good, money is just purely information, it's just a track record of economic value. Because of that, you can just move it with a very simple information signal. With just a few bytes, you can send the information that is needed in order to transfer money from X to Y. With nothing else is this amount of value possible with this little data, With everything else, you need a lot more data, and it's going to be a lot less value. So whatever it is, a video, that's a few megabytes of data or a few gigabytes of data. And what is the video worth? I mean, it's the video itself is just about being able to stream it. So for everything else that's digital, the value is on speed and performance, and the economic value attached is nowhere near high enough to justify paying for this. The competition for a $10 billion Bitcoin transaction is a $10 billion transfer of physical gold. Now, how much does it cost to move $10 billion of physical gold? Probably something like $10 million. But with Bitcoin, you can move it with 300 bytes. Right. And still have some spare change, and a few dollars at this point. So the price of moving money on Bitcoin can keep going up, and this use case will be justified. But all these other uses for distributed applications, they can't justify the. So with Bitcoin, we have a 1 million fold discount on the real world alternative. The real world alternative of moving $10 billion of physical gold costs $10 million. With Bitcoin, we do it for a millionth of the cost. With dApps, We do the opposite. We have 10, the cost of running a video app or a betting website or whatever it is on a centralized server is a million times cheaper than running it on a decentralized server. So, because you're just moving information around. It's not digital gold like Bitcoin, which is moving effectively the equivalent of physical gold around. You're just moving information around, and so you're doing it far cheaper and far more reliably on decentralized network. And that's why all these apps exist. On centralized networks.
So this might be a technical question, but I'm curious. So the Bitcoin blockchain actually like records the transactions that happen in Bitcoin. So if let's assume, best case scenario, Bitcoin adoption, reaches, as you mentioned, right now it's 0.5%, maybe it goes to more than 50% of the money supply globally. Doesn't that blockchain record become so unwieldy and so very difficult to actually manage, or how is that?
No, because we're adding it. This is one of the important ways in which I think you could have attacked Bitcoin by trying to change Bitcoin blockchain so that you could scale it by increasing the throughput, and then you make the blocks bigger, and then the blockchain becomes so unwieldy that not enough people can be able to run it online, and then it stops being decentralized and it becomes centralized. And that was the key thing about the battle in 2017 that I mentioned earlier that proved Bitcoin was decentralized, that people couldn't change this one tiny little metric because of this threat. And we stuck to the metric out to the network continuing to work as it existed. And the way that it is currently operating is that we're adding somewhere between 0.5 megabyte to 2 megabytes every 10 minutes. So usually around 1 megabyte every 10 minutes. So 1 megabyte around every 10 minutes, which is growing at a rate that is still consistently manageable for regular home PC users to operate on. So, computers keep getting faster. And Bitcoin is only growing at a very small regular rate. We're only adding 1 megabyte every 10 minutes. So computers keep getting faster, and 1 megabyte continues to become less and less of a problem for computers. So you'll still be able to likely run a Bitcoin node on your computer for a very long time. It is one of the top priorities for Bitcoin development. Because of the block size war, one of the top priorities for Bitcoin developers is to maintain this parameter in this sense, to ensure that it's continuously decentralized. And for your listeners, there was an interesting metaphor that was used by Haris Irfan in my podcast. He mentions the decentralization of Bitcoin as being similar to the memorization of the Quran, in that before the Quran was definitively written, you had a network of thousands of people around the world who memorized the entire Quran, and they could all correct one another, and they could all testify to the accuracy of each other's translation, but there was no central authority, and this continues to be the case today. So, you have thousands of Qurans being printed probably every day all over the world. From all over the world, they get printed, and they're all identical in their text. And there is no central authority that decides that. There's no central authority that is reviewing it, and yet this has survived, through the readers and through the memorizers and through the publication. We continue to have this immutable record, and Bitcoin is to an extent similar to that. And this is the mechanism in which it is being propagated, that everybody agrees on this, and then everybody continues to just replicate it more and more according to the agreement, and so it continues to survive.
Yeah, that's a really interesting thought. In a sense, everyone who memorizes the Quran acted as a node
exactly
in the network, and they verified that everyone else was accurate or not. So perhaps the Muslims were inventors of the very first blockchain in humanity.
Arguably, yeah.
Last two questions. What probability do you assign for Bitcoin failure? Like, is it a 0% probability in your mind?
I don't give it a 0% probability, but I think it is infinitely lower than the probability of failure of all the other alternatives. And this is the frustrating thing about talking to people who are not into Bitcoin, who continue to primarily, and it's usually coming from a place where people don't really understand the mechanics of it, that they continue to just be the skeptical from a place of ignorance, which you can't really argue with because you can't teach a person all of the technical stuff that you need to learn about Bitcoin to arrive at the level of understanding its degree of certainty and its degree of confidence. And if you refuse to learn it, then you think Bitcoin is not important, and if you think Bitcoin is not important, you refuse to learn it. And so that's this cycle of skeptics who's just impervious to logic, which is, well, it can't work, and therefore I'm not going to spend any effort on trying to understand it, and therefore I will continue to believe that it can't work. And the conclusion of that, is, well, what are the alternatives? How likely is your national currency to hold on? How likely is your bank account to hold on? How likely is your stock portfolio, your bond portfolio? What are the risks that are facing your bond portfolio? Compare that. You're lending to governments that literally lock up their people at home and stop them from working and throw them in jail because they're working because of a respiratory illness. And you're lending them money, and you're thinking you're hosting your life savings with them, and then you think that's risky. That's not risky, whereas Bitcoin is risky. So do a risk assessment. Like this is the problem. Of course, it's not zero. Nothing is certain. الغيب علم الغيب عند الله. But what are the alternatives, and what are you putting your money in? And this is the thing. So make an informed understanding of the risks involved with Bitcoin. And of course, the real risk with Bitcoin, I should say, the real and most important risk with Bitcoin is not some fantasy scenario where governments launch some quantum mega weapon for whatever activation. The real risk for Bitcoin, for you and for pretty much everybody, is you're going to lose your coins. That's by far the number one risk. You're going to misplace your private keys and you're going to lose it. So worry about that. The second most risk is you're going to get your coins stolen. Then somebody's going to take them. Beyond that, the network itself, the risks of the network itself are about 1 million times less likely than all of these things. So, and of course, the big, but far bigger risk than you losing your coins or your coins getting stolen is putting your money in government wealth. That's where the real risk is.
What is your price prediction for Bitcoin? Do you see it going up, infinitely in the future, or do you have a certain price target in your mind for Bitcoin?
No, I don't have a specific price target, but what I will say is that I can confidently say that Bitcoin is going to be higher 4 years from now than what it is today. This is my only confident prediction that I'll say, and I don't think anybody can make confident predictions about short-term price movements. Things are very volatile in the short term. One person buys, one billionaire decides to buy, the price shoots up. One billionaire decides to sell, the price shoots down. So short term, I don't think you can make predictions, but I think long term you can, and you can predict, as we say in the Bitcoin world, number go up technology is going to work. Bitcoin is built on number go up technology. The price just goes up in the long term.
Nice. All right. On that note, thank you so much, Saif. I really appreciated this conversation. I'm sure a lot of viewers and listeners found it really beneficial. So Jazakallah khair. And inshallah, we'll talk again.
Thank you very much. Thank you for having me, and I truly enjoyed this conversation. And I hope we get to discuss it further.